just as the internet's built, just as the financial system's built, that's how Bitcoin is going to be built. There's just a new financial system being built that's native to the internet. And all of these protocol stacks are emerging on it. People are deciding which ones, and there's different technologies that are going to be used to enable all of that to exist. Bitcoin's becoming this thing that everybody's making so much money in, and it's been around for forever. It's been around for 15 years. That's a very long time. That's if you're looking at a security and you have 15 years of data to analyze around it, that's solid. And it's something where everybody just keeps making a lot of money, and they're doing that in a historic way. They're making more money in Bitcoin than you could have made in anything else in measurable history.
All right. So today I have the pleasure of being joined by Eric Yakes on the podcast. Eric, thanks so much for taking the time to be on the show.
Yeah, of course, man. Let's get into it.
Awesome. So I'd love to get started at the beginning of your Bitcoin journey. And I think that's, specific for everybody, not necessarily, the moment that you discovered Bitcoin yourself, but maybe even, your background leading up to that as to what kind of primed you up to when you encountered Bitcoin and allowed you to kind of understand what Bitcoin is essentially. So from your perspective, where would you say your Bitcoin journey started?
I think from the perspective of what was priming me for being ready for it, it was, I really never liked school. School was always very boring to me when I was young. The first thing that really sparked my intellectual curiosity was economics around when I was, 17, 18. And I was led into Milton Friedman's, I was given Capitalism and Freedom by Milton Friedman. And that kind of sparked more of a contrarian view of how the world works and what the consequences are of political decisions being made by people today. And that primed me well for when I went off to college and I studied economics and finance in undergrad. And, I got my effectively Keynesian economic education through college. I got my, standard finance, modern portfolio theory, in the industry, Markowitz theory, who kind of defined all of that back in the 80s. You get all of that standard education in finance. And, there's nothing particularly wrong about the financial side. It's just a very incomplete way of looking at asset value, and you only have so much time. There's a lot more extended study after you graduate. I'm a CFA, and I learned a lot more into that. But even in the CFA curriculum, it's amazing that none of these topics that you learn about in Bitcoin are touched on, because you're supposed to effectively have the most comprehensive financial education you could really get outside of becoming a PhD at that point. And then PhDs, you just get very niche into theoretical topics that really aren't practical. But I think on the economic side, you get the Keynesian education in undergrad, and I was lucky enough to have, been introduced to alternative modes of thinking. I've always been a bit contrarian, and it's kind of just a natural mode of thought for me. So, I think one way or another, I would have been led to it, but I'm really glad that I was led to it early on enough to where I was home over Christmas break and I was reading about other forms of economic thought. And that was just always captivating to me because economics is just philosophy. It's just the most quantifiable form of it. And and those are all, big questions have always been interesting to me. Most other things kind of bore me. And so that's what spawned all of it. I was dead wrong about Bitcoin when I first heard about it in college. We bought, Chinese fake IDs with it, not really knowing what it was. I had a professor who asked us to write a paper where, I took my financial education and said it's a speculative investment with no fundamental value, held that belief for a long period of time. And I was lucky enough to have a friend who was pretty persistent about me looking into it when I first started working. And I was working at a corporate restructuring firm. We helped bankrupt companies. All these zombie companies that exist today are companies that are declining or close to bankruptcy, and they're kind of being held up because debt is so cheap. That was the world that we played in. It was definitely a perspective I had that this is the best way to make money with how the economy works today. And the numbers support that. Like distressed investing is the best returning alternative asset class. And that was kind of my logic for wanting to go into it. I had a very nihilistic perspective on, how things worked and what's the best thing to do given, how things work. And, betting on failure is a profitable enterprise in a fiat economy with large fluctuations from the manipulation of a central bank. So it's funny to think about, just because when I remember I was graduating and I was just like, oh man, I can't wait for the next cycle of bankruptcy. Like this is going to be good for us, like
Yeah.
that's how I thought about things. And, when's the next credit contraction coming? And, and that was one of the things that, I think having that perspective really primed me well to understand the problem that,
Mhm.
central banking really causes and extreme debt causes. Like we get to see where all the bodies are buried in our industry,
Mhm.
and you'll see these companies they're not valuable companies. It's what you'd think. It's sad. Like you show up at the company, the CEO doesn't want to be there. The CFO is going crazy. The employees are unmotivated, low lighting, dark rooms. Like there's a lot of like despair kind of in some of these companies. They're chugging along. People are cutting a paycheck 9 to 5, going home and trying to do anything but think about what they do for work.
Mhm.
And these things chug along because they can kind of like keep refinancing a lot of their debt over time. When really these things should just be closing up shop. They're not adding a ton of value to the economy through this. There's much more profitable ways to be, moving that capital around. But, having perpetually or artificially lower debt is something that keeps these things afloat. And so that's, in Bitcoin world, what we call malinvestment. There's just a lot of malinvestment out there. There is
Mhm.
investment happening into enterprises that would be better spent into other areas. And by, manipulating interest rates and by manipulating the pricing mechanism from which we determine where capital should be allocated is what causes all of this in the first place. Um, so that primed me well. And then my friend who, you know, kept pushing on it with me. He's like, look, you got to look into this. I was like, all right, I'll take another look at it. But like, look, it wasn't even that I really hated it. I was just like, this isn't the type of investing I do. When you're somebody who
Mhm.
has like, a securities education, so many people in finance I see run into this, the same problem that I did, where you get educated on how to analyze a security. Every investment in the world that you look at is a security.
Mhm.
And your entire education is built around securities analysis in some way, shape, or form. And everybody applies a securities framework to the value of Bitcoin. It's like, no, this isn't a security. This is like a new commodity.
Yeah.
And that's the error of thinking that everybody runs into, because I'll talk to people like, well, if it doesn't produce cash flow, then, how do I value it? Pretty much all securities valuation boils down to, how do we measure what the future economic benefit is going to come from us putting capital into this security today? And then we discount that economic benefit at a certain rate into the present because of the time value of money. And whatever the present value is what I should be willing to pay for it today based on all these different assumptions that we put together. Um, you can't do that for a commodity, but
Mhm.
a commodity is valuable. And a commodity is very valuable. Commodity value underpins everything that we perceive to produce cash flows in the future in some way, shape, or form, whether it's, you know, inputs to the factors of capital that are producing businesses that produce cash flows, or it's just actually the direct sale of commodities. There's all the different ways that resources underpin everything that we use and do today. And so how do we determine what makes that valuable? And
Mhm.
the reality at the most fundamental theoretical economic perspective of it is, well, it's what we observe in the market. We can come up with fundamental reasons, but at the end of the day, where the marginal price meets the marginal cost of production in a market is the price that we're perceiving around this. So we know that oil is something that's very valuable at its current marginal price, and the outstanding existing supply in the market. We can come up with like a market capitalization, quote unquote, like the total value of the asset, by multiplying the supply that we're aware of outstanding by whatever the current going market price is of it. And then we come up with say like that's the total amount of value. This is really just a proxy, right? Because price
Yeah.
fluctuates as the amount of supply and demand changes. So you have to view things from a very dynamic view within markets. So it's like, we don't really know. We just have all these proxies for how we think about value. None of these things are actually like really all that true. And it's when extreme events happen or big things happen that all these assumptions underpinning these proxies that we use in finance change. And then everybody's surprised and everybody's like, why? And that's the dependency on these modes of thinking is something that, like, I think people need to not be so pinned to in their modes of thinking about a framework. So getting back to the point, the framework of securities analysis that everybody has is based on businesses that are using valuable things to produce these cash flows. It's not about the cash flows. It's about producing value. It's the value that comes from the business. Cash flows are a proxy for how we measure that value. It's something that's tangible that we can look at, that occurs, and we can observe. But that's not what the actual value is. The value is that they're selling something people want. And the question is, why do people want it in the first place? And that's how you can predict whether or not a business is going to continue in the first place. And that's when creative destruction steps in and destroys things. And if you are just looking at the cash flows of a business today and saying, well, this thing has produced, a margin of 20% over the past, 10 years, and it hasn't changed much. So I'm going to forecast those cash flows in today. And it's like, well, what if their entire business model is going to get crumbled by AI tomorrow? And you don't understand the fundamentals. All you do is look at numbers and proxies. So you're going to get completely surprised by that effect happening because you don't know what's fundamentally happening behind the scenes that's going to creatively destroy your current business that you're investing in. So it's understanding the fundamental properties that make something valuable. That's hard to do. And that's why not a lot of investors are very good at it, because you have to be very specialized within an industry to understand things fundamentally. You have to spend all your time to really know it. There's a lot of people in finance that act like industry specialists, and they read research reports and they come out and they know a bunch of buzzwords of what's going on, but they aren't engineers. They don't actually understand the technology. They're parroting things that they hear from other people as they emerge in narrative. A pervasive issues that, causes a ton of capital misallocation over time. Like blockchain investing is a huge product of that. Nobody knows what the hell is going on. Nobody can actually assess how these protocols work, but they can pair narratives really well. And if the narratives sound good, they can expand very far, and a lot of capital can get allocated to things when people don't understand what's going on. So that was kind of, that view of the world of saying, no, we need to understand what makes something actually fundamentally valuable. Then we can decide how big the market is ultimately for it. Yeah. So the irony is, like, when people are like, we want to invest in an energy company because, we have consistent cash flows around it. It's like, well, really what you're investing in is that oil is going to continue to be valuable. And the second that changes is the second that cash flow that you have so much trust in starts to change very significantly. So that's the whole point, is understanding the fundamental drivers that make something valuable. And once you have that shift in your framework of thinking away from, I'm looking at everything from securities analysis, to saying, no, I need to understand why people demand something in the first place and whether or not that's going to continue. Then you're in the right mode of thinking to say, well, why is Bitcoin valuable? Why is this like new digital commodity something that people will demand in the future? And then that's when I think people from my background start to go down the rabbit hole, and you're like, wow, so here's how the system works today. Bitcoin's a new technology that's going to disrupt this entire system. It's this form of money that's completely neutral for the first time since like primitive history. And you can send it anywhere in the world instantaneously without asking anybody for permission. And we've just never had a technology like this before. And that's going to change how societies are structured. That's going to change how power works globally. There's all these big questions that start to come. And then you get led down the rabbit hole where you start asking, okay, well, what about the government? How are they going to stop it? This is impossible. It's too big of an idea to be true. And you spend enough time thinking through all these problems, and you think through them fundamentally, and you don't get misled by these like high level, narratives that emerge in the media, and you're going to be in a pretty good position to really understand what's coming. So I think what first got me hooked with all that context was when central banking was, it was some sort of like Reddit post or something where somebody posed this as like an alternative to central banking. And I think that was the first thing that got me curious. Before that, it was just blockchain tech to me. And I was like, dude, I don't know how to value this thing. Could be valuable. I don't get it. And because it was, posited to me as just blockchain check, it didn't make sense. But once somebody's like, no, this technology can be an alternative central banking, that sparked my curiosity to go, okay, this is something to invest a lot of time in, because I did understand that problem pretty well. And I really didn't understand any sort of solution for it. And I'm like, okay, that's a pretty cool idea. And then I spent a bunch of time, getting into the blockchain stuff and saying, okay, well, if Bitcoin was the first, then what about Ethereum? It does more stuff and it has faster transactions. It must be better. And then you get led into this spider web of knowledge around all these other alternative versions of Bitcoin that were created at this point in time. And they got a lot of that starting to like die at this point. It's been a long time going when new people get involved in the industry and they get led into just, a spider web. It's like you get caught up in all this stuff and you end up spending a lot of time learning about things that don't matter. And that's an opportunity cost of your time where you could have learned a lot more about Bitcoin. So Bitcoin's proliferating a lot more. It's becoming much more dominant in the mainstream narrative and relative to some of the other technologies. And that's good because I think new people are coming in and they're spending more time focusing on Bitcoin. So it took me, I had to learn about everything, and I read into here's all the other consensus mechanisms and blockchain networks and different forms of like smart contract functionality that they can offer and technologies around that. And just like, okay, well, it all sounds really cool. And I think you need to have enough humility to realize that like you have no idea how to interpret this information when you're reading it. Like just because you read some research report and it sounds complicated to you, and you cannot give yourself a pat on the back for reading about complicated things and you think it must be like smart people stuff. Like that's how a lot of people think about it, I think, when they first get involved. That's how I thought about it. I was like, oh, this is complicated. Wow, I must be deep. A lot of people must not be reading. It's like, no, you're kind of just getting sold. Like you're getting nerd sniped is the term.
Mm-hmm.
A lot of people, they get drawn to these complexity for the sake of complexity. And and the reality is that the original most simple technology is the innovation, and the complexity is what ultimately destroys it in the first place. And it took me, it was probably like a year or two that I spent learning about all this stuff before I was kind of like, oh, okay, so you learn enough to learn the reality, and you learn enough to be like, okay, so Bitcoin has these features that are unreplicated. You can't replicate these things anymore. And the fundamental trade-offs that are required to achieve all these other goals that the other cryptocurrencies have purported to have, you can't eliminate these trade-offs. These trade-offs are always going to exist. So if we want to make something faster and do more things, then we have to undermine its decentralization in order to do that. The entire point of this is to have a decentralized money so that it has all these benefits of being able to send it to whoever you want, whenever you want, wherever you want. And so you're throwing the baby out with the bathwater when you're doing that.
Yeah.
And that's the entire, once you get to that conclusion, you're like, okay, so, well, is there another way for you to have it do more things, and do things faster? Because that is a legitimate concern. Like the criticisms of Bitcoin start from legitimate criticisms. Bitcoin is too slow, fundamentally, within the layer one protocol architecture to be money for the world. It's a legitimate criticism. It should do more things because we can do more things. And these things are beneficial. And it's provably true. We can see, large markets that have emerged around that within cryptocurrency for smart contracts, et cetera. And like Bitcoin has smart contracts, they're just very limited. Those limitations were really important because those limit how much complexity can have in the protocol. And if you want to do a Google search on the amount of bugs that have happened in every other cryptocurrency and what the consequences of those bugs were for cryptocurrencies that were particularly valuable, look at what happened with Ethereum, you realize that complexity is your enemy, and that the limitations around the smart contract functionality that were put into Bitcoin originally were very purposeful so that it didn't run into these issues, because you open yourself to a world of more complexity the second you add in some of this functionality. Things go wrong, people lose money. If we're trying to create a new base layer monetary technology for the internet, we cannot have things go wrong. This needs to be, the most trusted thing that we could possibly operate off of. So it needs to be as simple as possible and have no risk of failure. So once you get to that point, Bitcoin's optimized for exactly what we want it to do. Then you say, okay, well, how did these other things happen? And then that's when you kind of that's when I got a lot deeper. This is after I was into Bitcoin. I started learning a lot more about, okay, well, what other protocols can help Bitcoin achieve its goals in some sort of way? And then all of a sudden it becomes very obvious. Oh, we're not going to have a bunch of different currencies because nobody would want to have a bunch of different currencies. People converge upon one currency. In my book, I kind of define the reason that we have, a variety of currencies today. And that's either like, information opacity amongst people, historically at least, like money emerged in different parts of the world because of like geographic constraints and people just didn't know other people. And then there's like sovereign coercion, which is kind of the primary reason that people are using different currencies today. You have to use this money within this jurisdiction because the government, requires you to pay your taxes in it. And outside of that, though, if that wasn't the case, then people do converge upon one form of money because it's a standard, because there's huge network effects and benefits to everybody using a common medium of exchange. So that's the whole point, is to have one form of money. So if people are converging on one form of money, then it's like, okay, well, we're not going to have a bunch of these different like forms of money. There's going to be one form of money. We're going to operate on that one base layer protocol. And it's probably going to be built in the same way that other systems are built. And that means with a bunch of other protocols that help it do other different functions. It's going to be like a layered architecture. We're not going to do all, everything with just one protocol. And when I say protocol, all a protocol is a set of rules that people mutually agree upon. It's like a language. We all agree that this word means this, and every time we say it, it has this meaning. And there's little nuances and distinctions between people, but we all adhere to like the same core structure of what the language means. We'll have slang and things that kind of emerge off. That's what a protocol is, and we all adhere to this Bitcoin protocol. It's this belief system of software that we've all downloaded, and you have to adhere to it if you want to exchange Bitcoin with other people at this point. You have to speak English if you want people to understand English. And that's it works the same with Bitcoin. But now if we want Bitcoin to move faster, we want it to do more things, you can, have that protocol interact with other protocols. And that's where the complexity gets much higher. But you realize that in the same way the internet was built with a bunch of different protocols. We had like the original TCP/IP layers, and then we ultimately had, HTTPS and, all these other protocol layers that are used today every time you hop on a web browser, and, HTML. And you realize, okay, so there's a bunch of different protocols that kind of provided the structure of the internet for us, but we had to agree on some very important base layer functions. There was a war over these protocols at the very beginning of the internet, right? For-profit companies, people with a lot of money, Apple, Xerox, IBM, very major names at the emergence of the internet, they all tried to create their own closed versions of the internet that you had to pay a fee to access. People ultimately gravitated towards the open one. And that's kind of how we view Bitcoin as. We view Bitcoin as kind of like the TCP/IP of, this new financial system. And that's kind of the key point. So it's like, that's how the internet was built, with layered protocols interacting with each other. And the financial system's also built the same way. We have, very specific forms. We have certain protocols used for certain types of transaction. Every time I'm paying, an employee, we're not using a wiring system every time we do that. We do the ACH, domestic payment system. It's much more efficient to do it that way. But if we have to send money to a founder internationally, then we're either using wire, or if they need that, or we're using Bitcoin. And Bitcoin's way better. But a lot of people are still operating within these types of systems. So sometimes we're doing international wires, and those take multiple days to settle. But you have certainty and verification that certain large sums of money are going to move across borders to a specific bank account. And then, so the base layer of all this, you have FedWire. That's like our international wiring system. And then we have Swift, that's like our domestic wiring system. And then Swift is our international structure for that. Then we have ACH, which is our domestic like payment system. Everybody's kind of getting their paychecks through that. And And then on top of that, we have certain middleware structures that allow them to like bridge into applications. And then these applications are things that like most consumers are using, like Zelle and Venmo and Cash App and all these fintech type companies that are just apps that are all built using the protocols that are underneath all of this. So we have this layered architecture within our financial system as well. And so that's the view. It's like, oh, wait, so just as the internet's built, just as the financial system's built, that's how Bitcoin is going to be built. And like, that's what we believe as a venture capital firm. And that's what we're investing around, is not a bunch of new tokens. And we can get into the token conversation where we think that's going to go in the future at some point. But there's just a new financial system being built that's native to the internet. And all of these protocol stacks are emerging on it. People are deciding which ones, and there's different technologies that are going to be used to enable all of that to exist. So like, that's kind of what our firm's built around, is that thesis. And that's pretty much what got me to where I was today. Is I started working on building this firm once, I kind of came to that vision of Bitcoin only as a form of money. And we're going to have like a layered protocol architecture that's emerging. And it's like, oh, wow. So there's a lot that needs to be done here. I mean, step one is buying Bitcoin and holding Bitcoin, but it's like, we have a lot more to build. And the potential market size of Bitcoin is very significant. There is very significantly affected by what ultimately gets built on top of it. So today, if we assume nothing else gets built around it, there's no other financial system, so like throw the Lightning Network out or anything like that. If we just assume just the Bitcoin protocol, then we're basically looking at digital gold 2.0 emerging on the internet. Like, that's the potential market size of Bitcoin. That's big. That's 10 to 20x from here potentially, and depends on what happens with gold price over time. But we're at around 2 trillion with Bitcoin right now, and we're around like 22 to 25 trillion with gold's total market value right now. So as Bitcoin consumes that market, and like, I think that's a certainty at this point, I would bet everything on that happening. I am effectively betting everything on that happening. And from the investor standpoint that might be listening to this, like that's the best bet you can possibly be making right now. And then the question is how much does Bitcoin extend beyond that? How much does it become a broader store of asset or store value asset? And then once it's consumed the market for store of value, and it's the best way of storing value, it's not, you don't want it in gold, you don't want it in real estate. You're not just mindlessly buying these equity indices anymore because Bitcoin has such a better upside. You're putting your money into just Bitcoin. It's that simple. Doesn't have solvency risk. It can't go bankrupt. It's the best way to store your wealth because it's the scarcest thing and it's native to the internet, and you can own it yourself without having to trust anybody else. And as more people come to that realization and it consumes the store value market, the question is how much is it going to be used for the other functions of money? How much is it going to become a medium of exchange, or how much is it going to become a unit of account? And as it becomes, we kind of view as a firm, like there's going to be multiple cycles where it does that. You can't be a medium of exchange until you're a broadly used store of value. If you look at how money was adopted historically in private markets, this is kind of how it works. There's things that people either, broadly use for its utility that everybody had. You could think about like agricultural societies where most people had, cattle and salt, and these were the common forms of money. So like a lot of our modern words that are these are kind of some fun facts about the words about money, but the Latin pecus, meaning cattle, is where the word pecuniary comes from, meaning of or relating to money. And then the Latin sal, meaning salt, is where the word salary is derived. And another fun fact is the word money or monetary is derived from this Roman temple where a lot of the wealthy used to store their money over time in their coinage, called the Temple of Huna Moneta. And that was based on this goddess. But moneta is where like monetary and money and all these terms actually emerge from. But so we have this like history of where these things happen, and like, cattle and salt were just things everybody kind of had over time. And that it's easy to naturally have a commodity that everybody wants and everybody needs at most points of time kind of emerge as a form of money that they can always treat. It's like, oh, we always kind of need more salt. And then it starts to get, a monetary premium put on it, and people start to use it as a form of money directly as opposed for consumption. So Bitcoin needs to be a broadly used store of value by everybody before everybody starts trading it with one another. Because while everybody views it as an investment, as a store of value, and it's very like, I don't want to give my Bitcoin. I pay people in Bitcoin for things for the educational purposes of it, in small amounts, but I don't want to spend my Bitcoin. I want to hold my Bitcoin for a very long time. And until it gets to the point where we're like, okay, Bitcoin is so valuable now that it really has consumed a lot of these markets, maybe I'm going to start spending a lot more of it. And in that, shift in mindset happens when it starts to mature within the store of value market, when it really has consumed a lot of it and it's worth millions of dollars and all these different things. And then people start doing the medium exchange, and then they start saying, okay, well, I'll just pay in Bitcoin. It's way easier. I have a lot of it. And at that point, maybe a lot of things have changed across all the other fiat currencies. And like, that's kind of the major shift when we're going to be using it for all these new things. So like, we view everything happening right now as like, we need Bitcoin to be the most accessible store of value. We just need that to grow before we even think about using it for a ton of payments. And people can do that, but we don't view that as like something people are going to be doing globally, at least at a micro scale, for a long time. There are particular situations where Bitcoin is used as a medium of exchange today, and it's being used globally, and there's large communities doing it, but these are very niche in like the broad scale of things. And there are people that are put in situations that are very different from like a developed economy experience. There are people in situations where their government is, hyperinflating its currency, and they don't have any property rights, and the only thing they can depend on is really like owning the asset themselves. So these things happen, and like the Human Rights Foundation is working on supporting a lot of that with like Alex Gladstein. And so we just view these cycles as happening between store value, medium exchange, and a unit of account for Bitcoin. And that's what's going to have it grow to become the global form of money over time. That's the big vision, is Bitcoin's going to be the first neutral and apolitical monetary system we've had at a global level. These things existed historically within smaller societies, but now that we're a globally integrated, society of humanity, Bitcoin's going to be the first neutral system that exists throughout the world. That's the big vision. And it needs a financial system built around it so that it can move more quickly and do more things, and do that in the most trust minimized manner. So like, that's what we're fighting for. That's the big vision. That's why I built this firm, and we're trying to invest in all the things around that. And that's kind of what got us to this point today.
Yeah. Well, I appreciate that. Was very comprehensive and very, insightful. I think that was a very good overview of, well, not only your journey, but I think also Bitcoin's value and why it's so important. I think one thing that stood out to me during that conversation that I want to touch with you upon is, I think Bitcoin adoption is something that's very interesting to me, because I think a lot of Bitcoiners like ourselves who, understand the problem, understand how Bitcoin solves the problem, invest in it, use it, all that stuff. I think we're kind of, sometimes I feel like you're almost living in the future and waiting for the rest of the world to catch up. And I think there's two components there that are super important for, I think, the rest of the world to also kind of start to move more towards a Bitcoin standard. I think one is the education piece. So as you said, I think a lot of people fundamentally don't understand, or still don't really get what the fundamental problem is. And I think until you understand that, the solution is going to be more and more difficult to understand as well. But then there's also the technological aspect. I think Bitcoin, as you were kind of alluding to, it's still very early days, and it's not Bitcoin, the protocol, but Bitcoin, the layers on top of it, how people interact with it, how people exchange Bitcoin, how people use Bitcoin. I think those are still things that, are very primitive, like the internet was in the early days. And I'm curious, from your perspective, from an adoption standpoint, how do you see Bitcoin's adoption progressing? Because I think the education piece is super important, people to understand why they need Bitcoin. But then at the same time, I think also my hope is that Bitcoin will become so easy to use, like the internet became so easy to use, that people will adopt it because it does become the dominant form of money globally. How do you see those two kind of things interplay with each other from an education standpoint, but also then from a technological standpoint, as to how we progress towards, kind of global Bitcoin adoption, if you will?
Education is something that I like on the education side, I think it's going to follow similar to what I'm describing of these different cycles. Like what's happened over the past few years with Wall Street and all the finance bros getting involved in the industry is they're getting the digital gold narrative right now.
Yeah.
They see that. To get a perspective on anything beyond that requires hundreds of hours of reading and understanding. Most people are never going to get there.
Mhm.
Most people that get involved in this industry are going to do it because people they know and trust are using it. That's how we do most things. That's how I do most things. If there's plenty of things, most of the things that I use on a day-to-day basis, I don't understand. I have no idea how this shirt was made. Um, but it feels good and it looks good. And other people I know have bought Lululemon. It's been fine. I've used it for a long time. So we're good. So like
Yeah.
most things that you're doing every day is going to be based on that form of reasoning and decision making. And Bitcoin is getting close to that inflection point where it's just this investment. It's similar to like how people have thought about real estate culturally, where it's just a cultural thing of, oh, you should invest in real estate because real estate always goes up. And that's just like a cultural phenomenon. Like anybody who doesn't have like an investment education and they're like, I want to start making more money with some of my savings in my 30s, and them and their wife like hop on YouTube and a bunch of YouTubers teach them how to like flip real estate or something.
Mhm.
Like there are these kind of cultural phenomenons that emerge around an investment. That's what's happening with Bitcoin right now. Bitcoin's becoming this thing that everybody's making so much money in, and it's been around for forever. It's been around for 15 years. That's a very long time. If you're looking at a security and you have 15 years of data to analyze around it, that's solid. That's more than enough. People are usually backward looking within the 5 to 10 year time horizon. Like we have something with quite a bit of history now to look at. And and it's something where everybody just keeps making a lot of money, and they're doing that in a historic way. They're making more money in Bitcoin than you could have made in anything else in measurable history. If you were to take like Apple or, any of these Nvidia, if you were to take these stocks and you were to say, if I would have invested in it when it first emerged, technically they're still a little bit bigger than Bitcoin today, like a little bit, but that's over a 30 to 40 year period.
Yeah.
Bitcoin did this in 15 years. It's the best performing asset in measurable history. It's completely historic. The way that it's impacting people's wealth, we just like haven't seen before from any other investment. And that is sending a ripple effect through society right now, where everybody's telling themselves like, how is this happening? And there's all these people that are becoming huge advocates. And what they're just saying is, look, if you trust me, put some money into Bitcoin and hold it for a long time and don't touch it. And a lot of people are starting to do that right now. And then they're going to make a bunch of money doing it. The girl who cuts my hair, I've been paying in Bitcoin for the past, 6 or 9 months. And now she's psyched and she has no idea why, but she just watched, you know, the 5 or 6 haircuts she gave me has, effectively given her the equivalent amount of value now of like, 10 haircuts. So she's like, yeah, Bitcoin's pretty cool. And that's just what happens with everybody as they get involved. And some people will decide to learn more, but it's really a particular type of person that's going to do that. So I think on the education side, it's something where we're going to go through cycles where right now everybody's learning that about Bitcoin being a good store of value. As that matures, then people are going to be like, oh, this is something I can send across the world within an instant to pay anybody I want. Yeah, that's really valuable. I wonder how that's going to be used in e-commerce. I wonder how people are going to do that. Oh, it's independent. I can control it myself. Um, oh, we have these adversarial governments who are censoring everything we do. And, I've dealt with my bank screwing things up. I woke up one morning, I was on a trip. I was about to leave on a flight for Bosnia, and my bank account was empty. And I'm like, oh shit, I got hacked. Like, and I get on the horn with the bank, and it was because somebody with my same last name in the bank was moving their accounts. And
Mm.
they ended up, because my name is similar to their name, they threw my account into that bucket. That's how stupid these people are. It's not based on account number. And they deleted my money, and they're like, oh, you have to come into a branch to like get this solved. I'm like, no, give me my money back. I need to leave the country in 3 hours. I can't go to your branch, and I shouldn't have to in the first place. And I had to escalate it over the phone over a period of 30 to 45 minutes just to get this resolved. And it's just like, oh, I mean, what the hell? No, these people can't do this with my money. This is my money. They don't have to tell me what to do to get my money back. And more people are going to have that kind of a mentality. And then that's where I think a lot of the education around how to actually use Bitcoin for what it was designed for is going to come from. Is it's going to be something where that's going to take a long time. In the same way that when computers were emerging, um, we had to have computer class in grade schools become a part of our society so that people are familiar with how to use a home computer. Computers are complex. Keyboards are complex. All this stuff takes a lot of time to learn. It's native to like every child nowadays with the touchscreen, but that's something that it has to be culturally embedded through the technology of the society over time. That's going to take decades to flesh out. Same thing's going to happen with Bitcoin. I mean, today people are going through an elementary school or high school education, and they have zero conscious ability to understand personal finance. They're not getting educated on any of this stuff. And that's a complete tragedy because I come out of elementary school and I know what a Nimbus cloud is, but I don't know how to pay taxes effectively or how to think about where to put my money. It's ridiculous. It's stupid. And that's going to be happening with Bitcoin. Is Bitcoin's going to be this really valuable, simple personal finance tool that everybody can learn and start learning how to use at a young age. And people are just going to take control of their wealth again. But that's going to take decades where you're not going to be using bank accounts. You're going to be operating independently and you're going to be owning the assets yourself in a safe way. So on the education side, there's, the short form of trusting people. And then there's the long tail of learning how to, be your own bank effectively. And then on the technology side and how that interplays, it just needs to make things simpler for people to use. And these are all the, this is kind of the trenches of developer debate and, things that we're reading about, learning about, trying to anticipate. And it's just a very highly technical debate around different systems. And I think, there's kind of two different views of the world. There is the view that we're going to exist in a world where all uses of Bitcoin are going to be completely, and this is at the extreme, of course, but all uses of Bitcoin are going to be completely trustless. It'll be able to do everything. And at the other extreme, there's kind of like the more doomer view of we're going to live in a world where Bitcoin's co-opted by banks and, it's going to be just digital gold 2.0 and people are just going to own it as like a security or something. And we think that there's going to be, it's not going to be either or. We think there's going to be two systems that are emerging in parallel. And we think, the traditional banking system is going to start adopting it. It's going to start seeping into it. And it's going to do that because it's valuable. People realize they can make money off of it. Bitcoin treasury companies emerge, gets put in as a strategic Bitcoin reserve. Same thing's going to happen with all the banks. It's going to start being put in as a reserve over time. And then there's the world where people are running their own Lightning nodes, or there's eCash mints, or people are using these zero knowledge rollups. There's all these other technologies that are emerging that allow us to own Bitcoin ourselves and, use it with different functions that are, more decentralized than a completely centralized institution. Those two systems are emerging in parallel. The long tail or the long-term system is going to be the Bitcoin native one that has a lot of work and effort ahead of it. And it requires a lot of education for people to ultimately get embedded into. And in the short term is going to be more trusted solutions that people are using. And that's fine. The way that I view it is every dollar that moves into Bitcoin, as opposed to being in the banking system, is a big step closer to a dollar that moves into like an individual that is self-sovereign and owns the Bitcoin themselves. I would rather have it in that. And I would make the same argument for something like stable coins too, because like the big thing, like if we have as this huge proliferation and demand globally for stable coins continues to happen, what's happening is it's going to put businesses all over the world on infrastructure that allows them to accept stablecoins. And what does that mean? They're going to be on infrastructure that allows them to accept a digital signature as payment, digital cryptographic signature. And what does that mean? It means people are one step away from having that acceptance mechanism be a stablecoin versus being Bitcoin. that is much better than people having their money in bank accounts. So I'm all for people moving to stable coins and that encouraging infrastructure to be built that's going to make people realize, oh, Bitcoin keeps going up. My stable coin is not going up the same amount Bitcoin is. I should probably move some of my stable coin into Bitcoin. And it's just opening up new pathways for, adoption of Bitcoin over time. So on the technological side, like anything that is increasing demand for Bitcoin, whether that's directly or indirectly, indirectly being like ETFs and bank accounts or centralized financial institutions, is better than those dollars not being in that system in the first place. So these two systems are going to grow in parallel, and they're one's going to be more quick than the other in terms of encouraging adoption because it's easier for people to use. But over the long term, I wrote a paper called Banks Without Bankers that kind of talks about what this new system could look like that's emerging, that's going to be like Bitcoin native, that people can operate in without trusting intermediaries, or at least not the same type of intermediation that we look at today.
Yeah, and I agree with you, and I think it's very interesting the perspectives that you have on that, especially around the education part. Because I mean, I think obviously education is super important. That's also why I'm making this podcast. I think it's important that people understand, not just what Bitcoin is, but specifically also the problem that it solves. But I agree with you that as not everybody or majority of the population is not going to take the time to learn that fundamentally, and I think they're going to adopt it as over time as Bitcoin becomes more popular, as it increases in value. I think now also, as you were alluding to, what we're seeing in the past year or 2 years is the adoption of Bitcoin through things like the ETF. Banks are starting to now be able to offer services and sell Bitcoin, and yeah, there's this fear around okay, is it a good thing or a bad thing in terms of overall Bitcoin adoption? And I agree, like any dollar that goes into Bitcoin is good. The more that people are aware of Bitcoin, the more that they put their financial energy into it, that's all good. What I'm curious about is how do you think, because you said that you think that we will move to kind of this Bitcoin native system over time, which I do also agree with. But I'm curious from your perspective as to what do you think the levers will be or the incentives will be to move to that Bitcoin native system? Do you think that is it more like people are going to get burned by the other system in the sense that there might be problems with the ETF where people can't get their money out of it, or similar with banks where we kind of have this fractional Bitcoin reserve system? Or do you think that, the Bitcoin native system will become so intuitive and easy and good to use that people will just naturally migrate there? What do you think is kind of the evolution of that, part?
There's always going to be more functionality that exists in the native system than there will in the incumbent system. When you think about how the incumbent system works, for people that go through these heavily regulated type institutions to do what they want to do, those institutions are never going to be able to keep up in terms of functionality. The compliance cost to run these types of things is massive. And whether this happens domestically within the US or whether it happens globally, it's kind of beside the point. But the native system is going to allow people to actually do whatever they want to do with their money. It's going to be something that's not really that controllable. So the ability to seamlessly do it by having the same knowledge and effort of using it in the more centralized system is obviously a huge point that will cause a shift. But in the interim, we'll see people that want to do it because there's just more things that they'll be able to do. They're going to have access to other things. It's like, oh, if I want to, if I want to take my Bitcoin and I just want to go gamble it on something, or, these are kind of the native markets that are emerging within a lot of it right now, but it's like gambling, like meme coins, or like access to like things that within a regulated system you wouldn't have access to, then that's bringing people into it over time. I think like a very legitimate example is going to be as people want to invest more in legitimate venture capital. So like right now today in the US is a great example of like there's these ridiculous laws about how, they're trying to protect investors from investing in, certain types of private investments. So like private equity, venture capital, all these classes of investment. Um, they're protecting them from that, but those people are being marketed every single day to go play the lottery and to go to casinos and to do all these other
Mm,
things. And complete scam. Like these people, the demographic you're trying to protect is the demographic that's spending a lot of their money on alcohol and gambling to try to get ahead in different
mm,
things. And it's like you're not protecting them from anything. You're just closing them off from the highest return area of alternative assets historically. You're closing them off from a very profitable form of investment, and you're making this a club where only accredited and only really rich people, accredited investors, are allowed to invest in it. It doesn't make any sense. These laws should go away. But I think there's going to be avenues where people can just, in the digitally native system, invest in startup companies directly, and not have to worry about any of these and this may not happen like within the US, but it's going to be happening globally. We kind of witness it happening globally with tokens. Um, like that's a very legitimate thing that I think is just, governments put up arbitrary constraints on what people can invest in. And people are going to find ways to like invest in these things, get money through that, and then put it back into Bitcoin, and then use their Bitcoin however they want to use it. And so I think there's just going to be more things that the friction created by having a controlled system is not going to allow, one, the system to move into in the first place, or two, if they ever do move into it, it's going to take them a lot longer to move into it that the digitally native system will be able to do overnight. But we're kind of witnessing that all happen right now, and where a lot of that's emerging is in developed economies where the regulated side of it's happening. But we see plenty of markets that are emerging kind of outside the purview of this, and it's just not controllable. In the same way the internet wasn't able to be controlled, they couldn't control online piracy. It's a game of whack-a-mole. They can shut one website down, it pops up somewhere else. Same thing's going to be happening around all this stuff, and it's just going to come down to people control their money now, and you can't really tell them what to do with it the same way that you used to, and the world's going to change because of that.
yeah, I love that. There's a lot of different threads we could pull on here, but I know we're short on time. So I want to ask one last question that I ask all my guests at the end of each episode. Especially now, we're getting a lot of new people in the space, and I think it's important that they get good advice when they are entering the Bitcoin space. So my question for you is, what advice would you have for any newcomers entering the space?
I think the number one piece of advice I'd give anybody entering is that the culture of the space is very unique from everything else. People are very helpful, and reach out and try to find people on X. Best thing you can do, be on X. Go on Nos for two. That'll be a cool way to find people, and people that are doing something you're interested in, just reach out to them and try to get involved. Do that by adding value for them before you ask them for something. Look at what they're doing, look at what their needs are, see if there's something you can help them with. And that's a good way to start establishing relationships with people. That's kind of how I got started with doing things in the industry.
Yeah. Awesome. Well, Eric, I appreciate your time. I appreciate all the insights. I'll, of course, also link things like your book, which was super helpful for me as well, for people to get more of an idea of some of these, fundamental concepts that we also discussed in the show. But is there anything else that you want to mention, or where my listeners can find more about what it is that you're doing?
Yeah, you can check out my firm's website at epochvc.io, and hit me up on Twitter.
Awesome. Eric, thanks so much for your time. I really appreciate the conversation.
Yeah, thanks, Stefan.